Let's dive into the remarkable story of Michael Saylor, the visionary who transformed Startegy Inc., formerly MicroStrategy, from a relatively quiet software company into a global Bitcoin juggernaut. Saylor's journey is one of bold conviction, risk-taking, and a belief in the future of digital assets that would shake up the entire corporate world. Saylor didn't just invest in Bitcoin, he made it the company's core mission, fundamentally shifting Startegy Inc.'s identity. He reimagined the company as a vehicle for massive Bitcoin accumulation, putting digital assets at the heart of its business strategy and making headlines across the financial sector. He saw Bitcoin as the future of money, a revolutionary digital gold that would outshine traditional cash, which he famously called a melting ice cube. Saylor believed that holding cash was a losing game in an era of inflation and currency debasement. Saylor's radical solution? Convert the company's entire treasury into Bitcoin, betting that this digital asset would appreciate dramatically over time and protect shareholder value in a way cash never could. This bold move made Startegy Inc. the world's largest corporate holder of Bitcoin, amassing over 673,000 BTC, worth more than $62 billion at recent prices. The company's balance sheet became a showcase for Bitcoin's potential as a treasury reserve asset. Saylor's aggressive strategy turned the company's stock, MSTR, into a proxy for Bitcoin itself. Investors began to see MSTR as a way to gain exposure to Bitcoin's price movements without directly owning cryptocurrency. For many, buying MSTR shares became the simplest way to ride the Bitcoin wave, especially for those who were hesitant to manage digital wallets or navigate crypto exchanges. The company's fate became directly tied to Bitcoin's price. When Bitcoin soared, so did the stock, rewarding both Saylor and his shareholders with massive gains. But this connection also meant wild swings. As Bitcoin's price fluctuated, so did Startegy's fortunes, exposing the company and its investors to extreme volatility and risk. Saylor wasn't just investing, he was making a bold statement to the world that Bitcoin was the ultimate safe haven asset for the digital age, challenging the status quo of corporate finance. Under his leadership, the company used every tool available, cash, debt, and share sales, to buy even more Bitcoin, doubling down on his conviction and amplifying the company's exposure. Startegy Inc. became famous almost overnight, and Saylor himself emerged as a global Bitcoin evangelist, appearing in media around the world to champion his cause. But with great risk comes great volatility, setting the stage for dramatic financial swings and making Startegy Inc. one of the most closely watched companies in the world of digital assets. Why would a successful software company risk everything on Bitcoin? It's a question that stirs both curiosity and skepticism. After all, most companies play it safe, diversifying their assets and hedging their bets. But for Michael Saylor and his team, the stakes were too high to ignore. For Saylor, the real risk was not buying it. He saw a once-in-a-generation opportunity and believed that standing still was the most dangerous move of all. He saw endless money printing by central banks as a threat to cash's value, while Bitcoin's fixed supply offered protection. In a world where inflation eats away at savings, Bitcoin's scarcity became a beacon of hope. Saylor believed every CEO had a duty to preserve value, and for him, Bitcoin was the answer. He saw it as a shield against economic uncertainty and a way to future-proof the company's balance sheet. He predicted that corporations, funds, and even governments would eventually follow his lead. Saylor envisioned a future where Bitcoin would be embraced on a global scale, transforming how organizations store wealth. By getting in early, Startegy Inc. aimed to ride the wave of global adoption. The company wanted to be at the forefront, not just following trends but setting them. The software business kept generating cash, which was funneled into more Bitcoin. Each quarter, profits were converted, deepening the company's commitment to this bold strategy. This all-in approach also made Startegy Inc. a household name, boosting its brand and profile. The company's daring move captured headlines and sparked conversations worldwide. Saylor's bet wasn't just financial, it was a complete rebranding for the digital age. The company's identity evolved, aligning itself with the future of money and technology. The company became a symbol of innovation and bold thinking. Its story inspired others to question the status quo and consider new possibilities. The Bitcoin bet was as much about identity as it was about returns. For Startegy Inc., going all in on Bitcoin wasn't just a financial maneuver. It was a declaration of vision, courage, and belief in a digital future. Let's talk about that eye-popping $17.44 billion loss in late 2025. It's a number that grabs headlines and makes investors sit up and take notice. But what does it really mean for Startegy Inc. and its massive Bitcoin holdings? It's an unrealized loss, a paper loss, meaning the value of Startegy's Bitcoin dropped but they didn't sell. The loss exists only on the books, not in the bank account. Think of it like your house losing value on paper. You only lose if you sell at the bottom. Until then, it's just a number that changes with the market. Startegy Inc. held onto its Bitcoin as prices fell, reporting the loss due to new accounting rules. These rules require companies to mark down digital assets when prices drop, even if they don't sell. Saylor and his team are long-term hodlers, unfazed by short-term dips. Their belief in Bitcoin's future keeps them steady, even when the numbers look grim. For them, these swings are just noise. They believe Bitcoin's price will rise over time. They see volatility as part of the journey, not a reason to panic. The loss looks scary on earnings reports, but it doesn't change their strategy. Their long-term vision remains intact, regardless of what the quarterly numbers say. Still, it impacts reported earnings and can spook investors, causing stock volatility. The headlines alone can trigger emotional reactions in the market. The company's financials now swing wildly with Bitcoin's price, making traditional analysis tricky. Analysts have to dig deeper to understand the real story behind the numbers. This is the challenge of holding a volatile digital asset on a corporate balance sheet. It's a balancing act between innovation and financial stability. The loss is real on paper, but not realized unless they sell. Until then, it's just a snapshot of a moment in time, not a permanent setback. Saylor's conviction is tested every time the market turns. Each dip is a test of patience and belief in the long-term vision. It's a new world for corporate accounting and for investors. Navigating these waters requires both courage and a clear understanding of what's real and what's just on paper. 2025 was a wild ride for Startegy Inc. Not just one bad quarter, but a year of volatility. The company reported a $5.4 billion unrealized loss for the year, with MSTR stock plunging nearly 50%. When Bitcoin soared, MSTR was a star. When Bitcoin stumbled, so did the stock. Despite the pain, Startegy doubled down, buying more Bitcoin even as prices fell. They funded new purchases by selling company shares, showing unwavering commitment. The company's financials became a reflection of Bitcoin's daily swings, not its software business. For investors, owning MSTR became a high-stakes bet on Bitcoin's future. Startegy's fortunes are now inseparable from Bitcoin's price. Every move in Bitcoin is mirrored in the company's stock and financials. Saylor intentionally made Startegy a de facto Bitcoin ETF before real ones existed. This was brilliant in a bull market, but it means the company's fate is out of its hands. Profits and losses now depend almost entirely on Bitcoin's wild swings. In 2025, a sharp Bitcoin drop led to that $17.44 billion paper loss. If Bitcoin rises or falls 20%, Startegy's reported value swings by billions. The software business is now an afterthought. The main event is the Bitcoin treasury. Traditional financial analysis barely applies. Investors are betting on Bitcoin, not software. Startegy's story is a case study in how crypto can reshape a corporate balance sheet. Why are these huge losses suddenly showing up? It's all about new accounting rules. Before 2025, companies could only mark Bitcoin down, not up, on their books. Now, with mark-to-market accounting, they must report the current value every quarter. Gains and losses are now front and center, making earnings reports much more volatile. This brings transparency. Investors see the real value of Bitcoin holdings. But it also means wild swings in reported profits and losses, driven by crypto's volatility. For Startegy, this new reality is a double-edged sword: clarity, but also chaos. The company must now publicly ride the Bitcoin roller coaster each quarter. It's a challenge for accountants and investors alike. The new rules make the crypto journey very public and very unpredictable. With all this volatility, how does Startegy Inc. keep the lights on? The answer: a $2.25 billion cash reserve set aside for day-to-day needs. This isn't Bitcoin, it's cash, ready to pay employees, service debt, and cover expenses. The reserve acts as a safety net, so the company isn't forced to sell Bitcoin during downturns. It ensures interest payments and dividends are met, no matter what Bitcoin does. Think of it as an emergency fund, providing breathing room and flexibility. Without it, Startegy might have to sell Bitcoin at a loss to cover bills. This cash buffer is a lesson in risk management. Even the biggest Bitcoin bulls need liquidity. It separates long-term investment from short-term operations. For any company in crypto, this separation is essential for survival. Startegy Inc.'s journey shows both the massive upside and the gut-wrenching risk of holding Bitcoin. The rewards: outsized returns and a hedge against inflation, if you time it right. The risks: extreme volatility, terrifying losses, and a stock price that can plummet overnight. This scares off most corporate treasurers, who prefer the safety of cash and bonds. There's also regulatory risk. Index providers like MSCI may exclude crypto-heavy companies, forcing funds to sell. Holding Bitcoin transforms a company's identity. It becomes a crypto proxy, not just a business. Success depends on factors outside management's control, requiring ironclad conviction. The strategy is high risk, high reward, and not for the faint of heart. Startegy Inc. is the ultimate test case for corporate crypto adoption. The world is watching to see if the gamble pays off. What's the lesson for other companies? First, know your risk tolerance. Volatility isn't just possible, it's guaranteed. Second, always separate your long-term crypto holdings from your operating cash. Startegy's $2.25 billion reserve is the most practical part of its approach. Don't risk your business by tying up essential funds in volatile assets. Third, this is a long-term game. Be ready to hold through massive downturns. Saylor's unwavering commitment is rare. Most companies should start small and cautious. The real takeaway: prepare for wild swings, keep a robust cash buffer, and only commit if you truly believe in the long-term vision. For most, a modest allocation is wiser than going all in. Startegy Inc. is blazing the trail. Others can learn from its bold, bumpy ride.